won't stop till I hear him say,
just to solidify what it is that I'm teaching you all, look at the United States dollar strength that came out when the news dropped. News comes out at 5:30 a.m. Time in the market is everything and something that people fail to pay attention to. Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, and foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, guys and gals, we're going to be going over some fundamentals. I'm going to be talking about the United States dollar strength. I'm also going to pull some tweets out that I posted to you guys on the internet, showing you guys on the charts where it is that I posted those tweets out to you all, giving you guys hints. Proof is in the pudding, giving you guys the most clear-cut technical analysis that you guys can possibly get on the internet, on YouTube for free, showing you guys that the technical analysis and things that we show here. I was able to catch a beautiful 1-to-3 risk to reward ratio on XRP United States dollar. I'm going to show you guys where I had mentioned to you all on Twitter that we were going to be looking to capitalize on such a move. And then I'm also going to be just simply breaking down some fundamentals for you guys. So this morning we saw United States CPI come out, and guys and gals, we see that U.S. inflation is still high, and that means that most likely federal interest rate hikes are still going to come into fruition. So we're going to be reading some fundamentals. I'm also going to show you guys some perspectives long-term from former Goldman Sachs executives for what potentially is going to come in this cryptocurrency market. But with that being said, strong dollar, right? That means, and I've been sharing this with you guys on my Twitter and through our technical analysis here at CYPRX, that we're going to see weak equities, weak gold, weak commodities, things of that nature. And also that means weak cryptocurrencies. Okay. So with that being said, just to take your attention to a tweet that I put out to you guys, I said Federal Reserve policy stance will turn around in the next 3 to 6 months. 2023 cryptos will pop. Watch one more rate hike, and then they will switch up and slam on the brakes. Get your bags ready because 2023 will be a very interesting year to remember for utility assets. Coming over here to this tweet that I put out to you guys a couple days ago, I said to you all, we will not see a major alt season until the DXY calms down and returns back to the 2021 levels. The charts will answer all your unrealistic timeline expectations and separate the real chart analysts from the fake bullish moon boys. Guys and gals, you need to be paying attention to the United States dollar strength. I told you guys roughly when the DXY was about 108 that we were going to most likely see the DXY appreciate in value, and since then it has done exactly that. We came and tapped all the way up until about 111 today when the CPI came out. So with that being said, showing you guys in extreme detail where it is that I put all these tweets out to you guys, again, hopefully saving individuals' portfolios. No bullish moon boy hype, guys and gals. If you all like the technical analysis that we provide here at CYPRX, go ahead and smash that thumbs up button, help us boost the YouTube algorithm. And if you're not already subscribed to the channel, make sure that you do so now. But you guys can see right where I posted the tweet, again, this little Twitter tab icon or whatever the case may be on TradingView, you guys can copy and paste tweets and actually see where people, especially bullish moon boys that you guys are following, actually post their tweets. And if you guys pay attention to where these two tweets came out that I've just recently posted to you all, we can see here that I said, we will not see a major alt season until the DXY calms down and returns back to 2021 levels. That is when the market shorted itself on XRP. Okay. Showing you guys that I tweet this stuff out to you at tops to hopefully save you all from buying at tops. Again, I mentioned to you guys multiple times that here at CYPRX, we do not do that. We do not buy tops. We do not dollar cost average into random positions. We actually have a strategy and a logical approach to the market that allows us to situate ourselves on the correct side of the market at any given time, regardless if the market is bullish or bearish. Okay. With that being said, guys and gals, I'm going to turn on my session indicators and I'm just going to show you guys how many New York sessions you all could have capitalized on short positions or sell positions during the New York session since I posted this tweet out to you guys, letting you all know that there's not going to be any type of major alt season until the DXY strength calms down. Okay. So here you guys can see we are on the 30-minute chart. We can see the New York session indicator is in red. You guys can see that New York session shorted here. So that's 1, 2, 3, 4, 5. This is technically consolidation, so we won't count that. Consolidation, so we won't count that. 6, 7, 8, and now 9 days worth of trading price action that you guys could have capitalized on sell positions since I put this tweet out to you guys, letting you all know that there's not going to be a major alt season. Guys and gals, go back and fact check your favorite YouTubers and influencers, and I guarantee you that they've been telling you guys that you can become millionaires by dollar cost averaging into cryptocurrency projects and things of that nature. Ladies and gentlemen, 90% of individuals will not become millionaires because they have no control over their emotions and they do not have a logical approach to these markets. With that being said, before I get into this technical analysis breakdown and show you guys when I mentioned to you all and where I mentioned to you all that we are going to be trading Ethereum and XRP this week, I just want to show you all what happened and why the price of XRP and the majority of the cryptocurrencies across the board depreciated in value temporarily today. Now, I'm not screaming that the bottom is in, and I've mentioned this to you guys until we break back above April and May highs. That doesn't mean that I'm not dollar cost averaging in at certain price levels. We have a strategy here at CYPRX that allows us to do just that. And I also mentioned to you guys that we're going to be intraday trading XRP and Ethereum until certain price levels are surpassed or until the prices depreciate in value, where we are going to be looking to add to our long-term bags. With that being said, guys and gals, I want to take your attention over here to Reuters. This was an interesting article surrounding the news that came out today in correlation with the 5:30 news event that came out, the CPI. Rents, food drive U.S. consumer prices higher. You guys can see here, I have highlighted Washington, September 13th. U.S. consumer price unexpectedly rose in August. Underlying inflation picked up amid rising costs for rents and healthcare, giving the Federal Reserve ammunition to deliver a third 75 basis point interest rate hike, most likely next Wednesday. The surprisingly firm inflation readings reported by the Labor Department on Tuesday followed in the wake of a recent data showing labor market resilience. The report suggested that inflation could remain elevated for some time. Fed Chair Jerome Powell reiterated last week that the central banks was strongly committed to fighting inflation. Guys and gals, again, don't fight the Federal Reserve. The macro environment and the macro perspective right now is what is driving risk on assets like cryptocurrency. So with that being said, if we see strength in the United States dollar, most likely we're going to see a depreciation in cryptocurrencies. Now, I'm not saying that there's going to be some massive capitulation event where cryptos are going to see new all-time lows. Do I think that that is a possibility? 110%. Have I warned you guys that that is a possibility? 110%. What I've never done here is given you guys these bullish price predictions that are unrealistic, hopefully saving your portfolio. Nothing that we constitute here is financial advice, but if you've been a follower of this YouTube channel for quite some time, you guys can see that we bring the realest information in the game, at least on YouTube. Everybody else is so focused on the upside that they fail to realize that there is still downside risk when investing in this market. We here at CYPRX are attempting to really wake people up and to understand that the macro environment takes precedence. So right here, another article from Reuters, just to back up the news that came out today. The Federal Reserve is strongly committed to fighting inflation and remains hopeful that that can be done without a very high social costs. Involved in prior campaigns to control surging prices, Fed Chair Jerome Powell said on Thursday in remarks echoed by other U.S. central bankers as they mule another potentially outsized interest rate increase. Guys and gals, if this happens, most likely we are going to see some depreciation in the cryptocurrency markets. Whether or not the markets make new lows underneath June lows, that is yet to be determined. You guys need to determine whether or not investing in certain price levels in the cryptocurrency market right now, you can handle price fluctuations to the up and down side temporarily. Long term, 3 to 5 years from now, extremely bullish on cryptocurrency. Short term, guys and gals, expect further bearish price action, up and down price fluctuations, because right now we are still seeing strength in the United States dollar. Again, guys and gals, pay attention to the macro environment and understand when the market is bullish and when the market is bearish. From an intraday trading perspective, even if you're just a long-term hodler, you can still have situated yourself on the right side of the market with a sound technological approach, simply buying in at all of these higher lows, and you would still be, look at where the market is at right now, you would still be up in your portfolio had you had a sound technical analysis approach to the market. So with that being said, now I'm going to go over into today's short position on XRP. I told you guys that I utilize the broker CYPRX to trade XRP leverage. With that being said, that leads me into today's trade breakdown. Guys and gals, I said to you all right here, 13th September at 12:51 a.m. You guys can see via this gray line specifically where I posted that tweet out to you guys. I said, Ethereum and XRP will respect CYPRX strategy to the T Tuesday and Wednesday during New York session. Just watch. Guys and gals, you cannot get any more accurate than this right here. I've given you guys thousands of price predictions. I've given you guys thousands of subliminal messages on Twitter. If you don't follow me on Twitter, make sure that you do so now. Remember, the best way to do that is to copy the link in the description down below, mainly because we are shadow banned on Twitter. That means that they've blocked our username from somebody just randomly searching it. So the best way to do that is to copy the link in the description down below. They do not like that we are truth seekers here at CYPRX, so they have shadow banned us, and it is very unfortunate. But you guys can see here via this gray line, we give you guys subliminal messages letting you all know that this stuff is going to happen. And guys and gals, you cannot make this up. CYPRX strategy to the T. So you guys can see that I tweeted that out right at the top, okay, right during the liquidity grab for London session. So now let's break down price action, and I just want to show you guys how insane the CYPRX strategy really is. As you guys can see that right here during London trading session, that is where I gave you guys a heads up that we're going to be looking for intraday trading positions during this New York session, and they came into fruition with the CYPRX strategy to the T. So let's break that down. This was a beautiful 1-to-3 risk to reward ratio. I even mentioned to the CYPRX students that I was going to be looking for intraday trading positions on XRP during New York sessions coming into this ETH merge timeframe. Okay, as long as the United States dollar strength is still strong, guys and gals, I'm going to personally be looking for intraday short positions on XRP. So before we jump down into this New York session, what we need to do is first analyze what happened the previous sessions. Guys and gals, we always want to pay attention to price action the previous day. So what I like to do is I like to backtrack at least 2 to 3 sessions. Well, if we backtrack 2 to 3 sessions, we need to be monitoring what the daily time frame did from a lower time frame perspective. So as you guys can see, backtracking 2 sessions. So if these are the 2 sessions that we're seeking to backtrack, if we're trading this New York session, we're looking to analyze price action during this trading day and this trading day, where you guys can see that the daily highs that were created during both of these days were not taken out. Therefore, we have to consider that if price comes into these higher levels, the banking institutions are most likely going to see these as premium levels to sell from. Well, guys and gals, look at this. This was the high of this day's trading price action. The banking institutions coming into the next trading day saw that that was a high and a premium to sell from again, and they did just that, failing to create bullish order flow or higher highs and higher lows above previous day session highs. That means, or is an indicator or a confluence that you can utilize in a later date, i.e. trading this New York session, that if we do not break above these previous day highs, most likely the banking institutions during this New York session or London session, if you are a London session trader, are most likely going to take short positions. With that being said, that was one of the confluences that we utilized as a catalyst to capitalize on this short position during this London session. Now, in previous YouTube videos, I've taught you guys how to identify previous areas that you could be seeking to buy and sell from in the form of premium and discount. With that being said, all we simply did was starting at the previous day's high or this Asia session, we highlighted from the candlestick bodies down to the wick, extended that over to the right-hand side, and you guys can see how every single new day's worth of price action sought this to be a premium range where the banking institutions took sells from. You guys can see here that this Asia session took sells from this roughly 3600 psychological level. I will go ahead and mark that off for you guys. Again, paying attention to the quarter theory here on XRP, you guys know that I like to trade off of the psychological levels that have to do with the quarter theory, because we're trading up against the United States dollar. That is going to be the 00s, 25s, 50s, 75s, and 00s. You guys can see that the market had a hard time breaking this 36 psychological level. We came back up into it, spiked through any over leveraged sellers that were selling from these highs, and then we dropped back below it. So this is now a second day's worth of price action where we failed to break this psychological level. Now, coming into this New York session, where can you guys see liquidity pockets or a retail trading setup to give us a confluence to short the market? Again, here at CYPRX, we seek to build confluences against retail traders. Guys and gals, you cannot make this up. Here is a double top formation before we head into this new day's worth of price action. And also here is the triple touch of a trend line. 1 touch, 2 touch, 3 touches. I've told you guys in multiple YouTube videos prior to this one that if you guys see these trading setups or these trading patterns in the form of retail trading, over leveraged traders, trade against that. Well, guys and gals, as soon as the market wicked up above these equal highs or these double top formational retail trading pattern traders who have over leveraged sell positions above these highs, you guys can see that during this brand new trading day, the market did what? It took sell positions from premium areas where the banking institutional giants sought to take sells from previous days. So we are still bearish coming into this New York session, which again is another catalyst to build as a confluence as to why we took short positions during this New York session trading day. Okay, so those are the higher time frame confluences, i.e. the 30-minute. Let's just go over them so that way you guys have clarity. We have previous areas where the banking institutions in the form of psychological levels sought to sell from. That's one. Number two, we have bearish order flow. Every single day, we see what? A failure to create new highs. That's number two. Number three, we have retail trendline liquidity beneath lows, which gives us a higher probability for the market to short. And we have internal liquidity above highs, which gives us an area for the market to grab liquidity to create the amount of momentum that they need to take the market lower. As above, so below. Remember, the pattern that we're looking for in order to take short positions is a what? A liquidity trap above highs. Then we're looking for the market to sweep those highs. Then we're looking for the market to shift momentum and show us the willingness to create new lows. Once this market maker pattern happens, this gives us the clarity to say that this is a break in market structure to the downside, where the market is showing us a willingness to attack liquidity above over leveraged premature sellers and activate buy stops in the form of liquidity above highs, making new lows. Now, as CYPRX traders, we want to get in on the trend continuation down. Guys and gals, all you need to do and all we simply did to catch this New York session trade was take our Fibonacci tool, again, which is a tool to determine where premium or discount is going to be from the high to the new low that was created, and wait for a what? An area where the banking institutions like to add to their orders, which is anywhere between 62 to 100% premium. We wait for a pullback into that area, and we seek to get in on an additional move from where the banking institutional giants forced liquidity grabs and shifted momentum in the market. Remember, the market makers are the only people with the amount of money to make this type of institutionalized pattern. Well, when you guys see it, it is your job as a trader to be able to create an edge for yourself to react to this, to give you a higher probability for a trade to go in your favor. If the technical analysis that we teach here on YouTube is easily digestible, guys and gals, you can only imagine that the CYPRX course content and material is 100 times more in depth. Okay, with that being said, now that you guys have the higher time frame, i.e. the 30-minute breakdown, so now let's jump down into the lower time frame, guys and gals. We're going to go down to the 10-minute chart, and I want to show you guys how we were able to get this sniper entry. Okay, with that being said, remember all the higher time frame confluences that we have. We have the higher time frame premium, rejection of psychological levels, bearish order flow, higher time frame liquidity setups in the form of internal liquidity, and external liquidity to come and target in the form of take profit areas or target areas in the form of retail trading trendline traders that are attempting to buy trend lines. Guys and gals, check this price action out. So heading into this new New York session, again, remember, a lot of people will say hindsight testing is rubbish, but that is incorrect. Remember, now we are on the 10-minute chart. Heading into this New York session, there are a couple of things on the fractal nature that you guys could have paid attention to again, give yourself confluences as to why this market was going to short. Now that we're on the 10-minute chart, another confluence to add is what? DXY strength. Guys and gals, I've mentioned to you guys in previous videos that if the DXY is strong, most likely XRP is going to short, especially if you're trading up against the United States dollar. It might change if you're trading XRP against Bitcoin or XRP against Ethereum or whatever the case may be. But if you're trading XRP against the United States dollar, we're going to be looking for that United States dollar strength if we're looking to short XRP or sell XRP. With that being said, coming into this new trading day, we see Asia session. What did they do? They got past price action at a high. Banks and institutions, guys and gals, are not going to buy from a high. Well, you guys already know that on the 30-minute chart, we identified this blue area as an area where the bank and institutions during previous days took sell positions from. Well, if we know that banks are not going to buy from a high, we know that price is at a premium area where they sold from before, rejecting psychological levels, guys and gals, we can be sellers. Well, look what happens. Asia session takes short positions from the high, from where banking institutions took sell positions previous days. Then they passed price action over into London. And what were they doing? Taking buy positions to add to the trendline liquidity beneath lows, so that way New York session can take sell positions to liquidate buyers from. Guys and gals, check this out. Coming into this London session, same thing. What do we see? We see in the manipulation window during London, price gets passed at a high. They sell, they create internal liquidity so that way they can take sell positions and profit. They come back for those early sellers that sold during the London session manipulation window that I teach you guys about here on the YouTube channel. Again, I can't give you guys specific times because that wouldn't be fair to the CYPRX students, but this is generally speaking the manipulation window, and you guys can see how the highs and the lows were manipulated. The banking institutions come back, they sweep that liquidity, and then they break market structure, creating a new market structure low. Well, guys and gals, over to the right-hand side, I just showed you what it is that we're going to be looking for to get into an additional short position is a sweep of liquidity above highs, and then a break of fractal structure beneath lows. Overall, we see over here that the daily time frame, remember, because this area is where the daily candlestick opens, is still respecting bearish order flow, where the banking institutional giants are still taking sells from previous areas of premium. So guys and gals, we are operating underneath of this area. We have bearish order flow. You guys can see that prior to this New York session, the banking institutional giants were sweeping liquidity above highs and making new lows. This is now a new A to B move that broke previous market structure and swept liquidity. Guys and gals, what does this look like to you? Exactly what it is that I drew over here to the right-hand side. We need an area of liquidity or a reason for the market to go lower in the form of trendline liquidity. Then we need a retail trading trap in the form of early sellers above highs that sell double top formations. Then we need to see a sweep of that liquidity and a shift away from that momentum. Guys and gals, this is where we're operating at now coming into this New York session. Simply all we had to do now that the market created a new A to B move was wait for a pullback, respecting all the higher time frame confluences, taking our Fibonacci from the A to B move, put in a position in the form of a sell limit, and wait for the market patiently to come back up into our area of interest, which is exactly what we did here at CYPRX. Guys and gals, watch and pay attention. Taking our Fibonacci from the A to B move, where London session sold from, in the form of grabbing liquidity above highs and making new lows, we knew that coming into this New York session, again, to solidify confluences, I want you all to pay attention. Look at where New York session opens at. Guys and gals, where is price action at? At a high. How many people prior to the New York session in the manipulation window that we talk about here at CYPRX were buying prematurely, chasing some type of imaginary trend line? Now you guys can start to see, if you're still here, smash that thumbs up button, what retail traders are doing incorrectly. They are buying from these lows, buying from these lows, buying from these lows, and again, buying from these lows in the manipulation window specifically. Again, why? Because they are taught by all of these gurus on the internet that these retail trading patterns in the form of double tops and trend lines actually exist in the market. Banking institutions do not trade off of these retail trading patterns. They trade against them to build liquidity in the market, to liquidate that liquidity, guys and gals, in the form of over leveraged traders. So another confluence that we can add is that New York session got past price action at a high. Look at when New York session opened. Guys and gals, you cannot make this stuff up. The market goes, and look at when price action drops. So we entered in for our sell position there, taking our Fibonacci from the A to B move that broke market structure, extending that over. You guys can see that our entry was where banking institutional giants like to sell from if they're going to add to their overall sell position, which is anywhere from 62 to 100% premium. So we added a sell position. Safe stops were above the previous area where banking institutions sought to take premium sells from. So above the Asia session highs over here, safe stops, and this gave us a beautiful 1-to-3 risk to reward ratio. As soon as 5:30 a.m. hit, when the CPI news came out, look at the candlestick that was printed. United States dollar strength boomed, and the market straight tanked. If you guys have been paying attention to what I've told you guys in the past on my Twitter, smash that thumbs up button, hopefully saving people's portfolios. This entire area of retail trader buyers beneath these trendline lows were completely annihilated in the form of over leveraged traders beneath these lows. It is absolutely disgusting what is being taught on the internet. Bullish Moonboy hypists have been calling out YouTube videos telling you guys that you're going to become a millionaire overnight buying and selling XRP. That is not the case if you do not have a sound technical analysis approach. Again, nothing that we constitute here is financial advice. What we attempt to do here at CYPRX is show you guys how we create an edge for ourselves in the market. If you guys want a piece of that pie, again, the link is in the description down below for the mentorship program. You guys saw how I tweeted out to you guys right here during the London session manipulation window that we were going to be looking for intraday trading positions on XRP and Ethereum. Guys and gals, you cannot make this up. And just to solidify what it is that I'm teaching you all, look at the United States dollar strength that came out when the news dropped. News comes out at 5:30 a.m. Time in the market is everything and something that people fail to pay attention to. Guys and gals, look down at the bottom of my chart. September 13th, 2022, 5:30 a.m. This is exactly when the United States dollar strength picked up and when the CPI news came out. And look at this. This is exactly when at 5:30 a.m., look down at the bottom of my charts, we entered in for a short position on XRP United States dollar, shorting XRP because the United States dollar strength increased. Based off of something that I've told you guys in past tweets is that we will not see major alt seasons until the DXY calms down. Blessings to you guys all. Hope that you guys enjoyed that technical analysis breakdown. Again, the link is in the description down below for the mentorship. Before we go, I'd like to just share these two fundamental articles for you guys. We see U.S. Congressman slams crypto, says government may have the opportunity to gain control over digital assets. The U.S. government, who has a reputation for being a vocal critic of crypto, says an opportunity may arise where the government could take back power over digital assets. With this article being said, guys and gals, please make sure, again, not financial advice, but this is what I do: self-custody your crypto. Get it off exchanges, get it off hot wallets. Please be safe out there, guys and gals. Do not invest in meme coins or NFTs that catch your attention because everybody else is buying them and making them rich. Okay, guys and gals, please protect yourself out there. Invest in utility, do your own personal research, and do not buy or sell anything without having accepted the risk. Okay, because regulation is coming, and when regulation comes, guys and gals, they are going to weed out the weak hands. Okay, with that being said, that means all malicious and inappropriate activity in the cryptocurrency market they are trying to disband and get rid of, so that way institutionalized investors can come in a safe and acceptable manner. We see right here, this continues in a new CNBC interview. Representative Brad Sherman of South California says now is not the time to ban crypto, but highlights that he sees a scenario where the government could crack down on the nascent asset class. Again, this is all malicious activity and just hacking and all this crazy stuff. Again, guys, these brokers, these exchanges that you're choosing to utilize, like for example, Uphold, MEXC, who have no institutionalized liquidity backing their buying and selling on their exchange. I'm just saying, guys and gals, if you're holding crypto online on hot wallets, be careful. Again, not financial advice. 90% of my cryptocurrency is self-custody. Okay. Coming over here, this was a very interesting article again to solidify my long-term view. Former Goldman Sachs executive says Bitcoin and crypto bottom are already in, predicts a big shift in the macro backdrop. I've mentioned to you guys in a previous tweet that, I'm expecting in the next 3 to 6 months for the Federal Reserve policy stance to turn around and for cryptos to pop in 2023 at some given point in time. Now, that's not to necessarily say that I'm expecting new all-time highs, which would be absolutely phenomenal to see, but I do expect a turnaround in the market in the next 3 to 6 months when the Federal Reserve shifts interest rates and all of those things. Again, the macro perspective takes precedence. Last but not least, if you guys are still here, make sure that you're subscribed to the YouTube channel, smash that thumbs up button. This was a lot. I know I'm still out of town. I'm just trying to get as much information out to you guys as possible. I want to take your attention to this tweet here. Please, ladies and gentlemen, stop watching YouTubers with thumbnails that say things like, these cryptos will make you a millionaire, or things like, how many coins to become a millionaire. 99% of people in this market, ladies and gentlemen, will never see 7 figures. They will never become rich or millionaires simply because they have no emotional stability. That is a 110% fact, guys and gals. You cannot just expect to come into this market with zero emotional control and expect to become a millionaire because of some meme or because of some YouTuber that you watch telling you all that holding 1,000 coins of XRP or 1,000 coins of XLM is going to make you rich eventually. Ladies and gentlemen, that is not realistic. If you have that approach to the market, you are becoming a statistic. You are providing these YouTubers, these influencers with views, which is how they they make their money off of you, and especially signups off of their affiliate links. 90% of the influencers on this YouTube and Twitter space do not actively trade the markets. They just talk fundamentals, they read tweets to you guys, and they give you guys in these unrealistic bullish expectations. And then you guys are the ones getting annihilated from the market and losing money because you're reading these thumbnails, you're reading these tweets, and you guys know exactly what I'm talking about. Thumbnails that will literally say something like, how many H bar do you need to become rich? How many XLM do you need to become rich? Oh my gosh, XLM is going to pop and make you the richest person ever, millionaire overnight. You guys know exactly what I'm talking about. Please do your due diligence, do your own personal research, only invest in money that you're willing to lose. Remember, this is a emerging asset class. That means that we are going to experience high volatility from now until roughly about 2030, until this market finally stabilizes, when regulation fully comes into play, when banks have completely adopted this technology, and when finally there is enough liquidity in this market to actually stabilize prices. Blessings to you guys all. I hope that I give you guys the most clear-cut clarity, showing you guys in extreme detail how we were able to capitalize on a beautiful 1-to-3 risk reward ratio on XRP, showing you guys ahead of time that we mentioned to you all that we are going to be looking at trading setups, showing you guys that the proof is in the pudding, that the macro perspective still takes precedence when you're trading these markets. Imagine how many people bought at these tops or bought at these lows and got annihilated because their focus is on bullish moonboy price predictions and not the macro backdrop. Blessings to you guys all. Subscribe to the YouTube channel. Give this video a thumbs up. I'm sorry if that was a mouthful or a lot to handle, but I do appreciate the love and the support. As always, be cognizant, be aware. You guys, again, don't forget the link is in the description down below for the mentorship program. Don't be afraid to reach out to me. Send me an email, customer support email, schedule a Zoom call. I'd love to hop on a video chat with you and explain to you what to expect. As always, I will see you guys in the next YouTube video breakdown.
Won't stop till I hear him say